Okay, so the retirement savings contributions credit, otherwise known as the savers credit, for individuals who meet certain income guidelines, not only do they get to reduce their taxable income by the amount of contributions to retirement accounts, they also may be entitled to an additional credit based on the amount of the contribution. Okay, and so what we would have here essentially is they're going to get a deduction and a credit for the same amount of money. That hardly ever happens, but this is one place where it can happen. Now, the income levels are fairly on the lower side for those who qualify for it. Maximum contribution amount is $2,000 per person. So most you could have on any tax return is $4,000 credit. It is not a refundable credit, however. So how that works, so let's just say you've got income of $50,000. We'll be married filing jointly. And you contribute to a 401k. You contribute $5,000 during the year. This means your taxable income now is $45,000, and your tax is going to be based on that $45,000. So you've got this deduction here in the form of a pre-tax benefit where it's never being subject to tax. And you get, your result then is this taxable income of $45,000. Well, in addition to that, you're going to get this credit on the tax return. The credit amount, the amount of the credit is going to be dependent upon income and filing status. So if you are married filing jointly and your income is between $43,000 and $66,000, which it is, our modified adjusted gross income, let's see, I think is based on this amount, but I'm not 100% sure. Our percentage is 10%. So what we get is the amount of contributions we get to take by 10% of that. This is our credit. So if we do our calculation and figure out that our tax is $2,000, now we get to reduce that by 500. Now our tax is 1,500. So you got to double up. You got the deduction here, and you got the credit over here. Now you can see the income levels, it ranges from 0% up to 50%. Income levels are on the low side for individuals who receive a 50% credit, but that's a pretty big chunk of change. You're getting half of the money back that you contributed, up to $2,000. And you're never paying tax on that amount to begin with. So it's a good deal for individuals who qualify for it. So here we got Hector, single, modified AGI, $25,000. Okay, single, $25,000. You can see this rack jumps up pretty quickly. So he's in the 10% bracket here between 21.5 and 33. Once you get above these, you're not eligible for the credit any longer. So he made a $1,000 contribution. Retirement savings contribution credit is 10% of that amount as well. If his AGI was under 19,750, then he would get 50% of that. He'd get a $500 credit for that contribution. question.